Hello and welcome to Moving Iron Podcast Markets with Chip Nellinger. This edition of the Moving Iron Podcast is brought to you by Axon Tire, helping dealers move more iron for the past 100 years. For more information, go to axontire.com. Axon Tire would like to help. They would like to help our listeners too, but they also, if you're interested in a Axon travel notepad, the loyal listeners of the Moving Iron Podcast, send a email to marketing@axontire.com, and Axon Tire will send you a free travel notepad. It's got a little book. Open it up. Got a notepad in there and a pen. They'll send you out a couple of those actually. So if you're interested in that, send an email to marketing@axontire.com and make sure to tell them that the Moving Iron Podcast sent you. Valley Transportation has been hauling ag and construction equipment across the country for the past 33 years. Call Parker at 800-657-4910 for all your trucking needs at Valley Transportation. Our goal is to help you reach yours. No matter how you buy your ag equipment, whether it's from a dealer, an auction, or a private party, AgDirect can help you finance it. You can even apply online at agdirect.com. Learn more about your financing options at agdirect.com. Tractor Zoom has over $20 billion in heavy equipment sales data. Tractor Zoom's Iron Comps is the industry's trusted solution for transparent equipment values and auctionable pricing insights. This podcast is also brought to you by Anvil AppWorks. Their Dealer Connect CRMI app with integrated inventory management is an affordable Salesforce-based solution for your dealership. Create connected customer experience and transform how you work. Chip Nellinger is with Blue Reef Agri Marketing out of Morton, Illinois, and he's nice to come on talk about what's happening in the marketplace. So, Chip, how you doing this morning, man?
Hey, doing well. It is a full-fledged fall here, and I'm enjoying it. I had a 4-hour road trip yesterday east, all the way to Indianapolis and south. I saw one field of beans cut on the way there, and on the way back, I saw about 4 combines rolling. So it is going to really pick up steam here going into the weekend, and it's that time of year, and the weather's starting to feel like full-fledged fall now.
Yeah, this is one of my favorite times of the year because about anything that you want to get done in this time frame is happening right now. We're out here, we're digging sugar beets, we're picking up edible beans, we're getting that final cut of hay done, we're getting cutting or chopping silage, and corn harvest is knocking on the door here in about 30 to 45 days. So it's been it's definitely that time of the year where things are rolling, and it's a unique time to talk to customers. I can tell you that.
It's a busy time, and
it is.
It seems like it's been a long growing season, and I think everybody's ready to get this crop out of the field and get it in the bin. So hopefully everyone stays safe out there.
Yep. So overnight, man, there's been a lot of pressure on the marketplace. You saw a huge backside pressure, I guess, from the Fed's news about raising rates. What we saw there, oil. Let's talk about that one for a minute. Oil overnight has just gotten shellacked, man. It's down to I have to pull it up here and take a look at it, but it looks like it's almost near $80 right now. I guess take a look at that, Chip. That's got to be a huge technical marker from where oil's been, how far it's slid down now. That $80 mark has got to be putting some real pressure on the oil market.
Yeah, it really is, and a huge swing. Essentially 24 hours ago from when we're recording right now, crude oil was up like almost $3 a barrel, and wham! It wasn't. Didn't even take till noon. You were almost back to unchanged, and then a huge reversal for lower overnight. You still have all these markets, financial markets, still kind of pressured by the Federal Reserve interest rate increase. It was pretty well telegraphed and anticipated, 0.75% on Wednesday afternoon. But since that time, we've had some continuing pressure in the stock market. Interest rates are sharply higher. Crude oil, now kind of pressuring that $80 level in the December contract. If you give way there, technically on a chart, it looks like you could, drop a significant amount more, maybe even arguably into the mid to upper 60s. In my mind, the crude oil market is a good proxy for the general economy. And, the Federal Reserve is pretty well, given the world their playbook, opened it up and underlined, the play they're running here. And we're going to raise interest rates high enough to stop inflation. And, boys and girls, that's going to be painful. It's going to slow the economy. And, I don't think they've made any, qualms about the pain that's coming, and these markets are reflecting that. The grain markets have held together until today
Right.
really well. I thought they just kind of shrugged things off and really held together well. But today, I mentioned earlier, I just think that the weather's pretty good across the whole Corn Belt. Basis is still good. Harvest is, it's like they flipped a switch here, and harvest is really going. So you combine this pressure in crude oil, the stock market really selling off, the dollar at 20+ year highs, and then an open harvest weekend, and the grain markets are kind of taking it on the chin here, in the overnight and early morning trade. I think the break will be well supported, but it's a tough environment for the grain markets to rally because they're just lacking
Right.
that bullish spark right now, and they look at the crude oil market, the stock market, and it's easy to sell off in that environment, unfortunately.
Yeah. Yeah. So let's talk about that a little bit too. So the other thing we were looking at what we saw happen in that September report come out, and that September report really highlighted some of those deficiencies that we've seen in carry out. No big surprise there. I mean, that's not a big shock to anybody. I think one thing that the USDA did, and again, it was telegraphed widely when you start looking at the various groups that go out and do these estimations, but rolling back the estimated bushels per acre on about everything except for soybeans. They kept soybeans about where it's at, but looking at that stuff, you're at a harvest low time anyway. I mean, that's just kind of where we're at that time of the year. But leading up to this point, we saw a big climb in those markets. Looking at that, do you think this is just a blip on the radar right now, Chip? Do you expect to see a kind of a dead cat bounce type of thing here after today, or do you feel like this is going to be more of a trend moving towards the next couple of months?
Yeah, that's a great question. I think it could be a couple week trend, meaning if we've got an open harvest window here for a couple weeks, and it looks like we do over this way, I think you could keep some pressure on these markets. Face value, going back to that September report, it was wildly bullish, and the market had rallied into it, as you mentioned, and then continued to rally after that report. And so if it weren't for these outside markets and the pressure you're seeing in some of these markets like crude oil and the stock market and strength in the dollar, I think we'd probably be at a higher level than we already are in corn and beans. So I do think that, the stocks are very tight. Next week on the 30th, I believe it's next Friday, we've got the quarterly stocks report. That'll give us what our final old crop ending stocks are. And then on October 12th, we've got the next USDA report where they're going to do an update on yields and demand. So I think the next 2-3 weeks here with harvest advancing could pressure the market a little bit. I don't think that you're, going to drop corn $1, but you could drop it, 40, 50 cents easy enough, and 60 to 80 cents in beans. I think that the end user community will take that break if we see that and extend some coverage. And then it's just about, the rate of change from the USDA on the October crop report. Do they have another 2 or 3 bushels to cut in corn and another bushel in beans? If that's the case, we're probably going to have a heck of a rally into winter. Do they stabilize it or maybe go back up a touch and get the market thinking, okay, they're very close on yield? Maybe we just continue to slop around a little bit. So I think in the short run, next 2-3 weeks, just looking at harvest advancing, you could easily have a sell-off, especially if you keep these outside markets under pressure and crude oil continues to sell off. And, but I do think that break at some point, typically, probably by the October 12th crop report, we'll find some sort of kind of quote unquote harvest low and then, try to stage a rally on into winter. And then it's a wild card. You got so many things affecting it with the outside markets. The South American weather situation is going to get front and center here pretty quickly, and going to continue to have a lot of factors that drive a tremendous amount of volatility.
Yep. You take a look at, I pulled up a Business Insider and looking through it, and they have an indices section that you can go look at, and they got a map of the world, and you click on the country, and you can look at everything's red except for the entire world is down today, except for
Yeah.
Italy and Chile. They're the only two places that are green right now, and they're just like barely green. So there's a lot of pressure right now in the world, especially. I mean, you've seen it. I mean, what the European Union's doing with raising rates, what the U.S. is doing with raising rates. China's raising rates, but you can't really trust what China says very well. Obviously Moscow, and Russia and those what they're doing there is not. They've got another batch of problems on top of all that. So there's just a ton of like you just said it, volatility in the
And
entire world right now. That's just pointing to a lot of
Japan,
downward.
yeah, don't forget about Japan. They're an absolute mess right now.
Oh,
And
yeah.
that's been one
They're
thing
getting
that's
slacked.
driven some of this dollar strength. Is Japan's bucking the trend, saying, "Yeah, no, we're going to keep interest rates at zero. We don't need to raise rates," and it's just crushing their currency.
Yeah.
Japan's a huge importer of our agricultural goods, particularly corn, and so
Yeah.
it's a scary situation out there. And almost today, you look at these markets, S&P futures just getting crushed in here, and rates up, the metals just getting killed, crude oil getting smoked. It almost feels like, something's breaking. Unfortunately, it's a little bit of a scary feel in here right now in these outside markets. And obviously it's going to spill over to our grain and livestock markets too.
So let's talk about us. Next thing I was going to bring up, let's talk about the dollar a little bit. You see happening there. The dollar has shown had a pretty big surge there for just a little bit, and then we saw kind of I don't know, collapse is not the right word, but it fell off pretty quick from those highs we saw. Which is, I mean, it's almost like you used a good analogy about 2 or 3 podcasts ago. The cleanest dirty shirt syndrome, and that was you're seeing that right now with the dollar. It's still it's still up there. It's still higher. I mean, right now we're almost parity with the euro. If you take a look at the Canadian dollar versus the US dollar, we're about 35% higher. I mean, so that's got to put some pressure when you start looking at how the Canadian market is being priced in there as far as grains goes. So I guess you're looking at the dollar right now, Chef. I mean, what are your thoughts there?
Yeah, I mean, you back to that cleanest dirty shirt, right? The United States was the first country to start raising rates. They've raised them further and faster than other places in the world. Other countries you mentioned earlier are starting to come along and raise their rates as well. But that's all the dollar in any currency cross rates are just a differential in interest rates. So a lot of money flowing in to the dollar because that's the highest yield right now. Highest, in kind of the safe, normal world. I mean, you could put your money in Argentina, where they're 70% inflation rate, but it's not very stable there. And so that's drawing a lot of money into the dollar. It's crushed some of these other currencies. It's created a lot of problems. So as bad as it is here, when we go fill up our car or go out to eat, it's even worse in other parts of the world because of the strength in the dollar and the weakness in their own currencies. And yesterday morning, on Thursday morning, we had the export sales report. It wasn't very good. And so if that's going to be the trend, that's a real problem, real headwind that we've got in all our products. How can we sell this to the rest of the world when it's getting more expensive? Our products are getting more expensive daily because their currency is going lower. Their economies are slowing down. It's a bad combination to have. All that being said, there's still some inelasticity to demand, right? People have to eat, livestock have to be fed. And so there still is going to be some demand. And until South America comes online with new crop production late winter, we're one of the only places in the world right now you can get corn and beans. And that's a good thing. But it's a scary environment out here. On the one hand, you got really tight stocks, maybe the crop's shrinking, tightening stocks further. That's friendly. On the other hand, you've got this what seems to be an apparent world slowdown in the economy, and that's going to curtail demand a little bit. And so it's going to keep things wildly volatile, in my opinion. It doesn't mean we can't have upside. I think eventually you're going to be north of $7 on corn and north of $15 on beans. But it's going to be a bumpy roller coaster type of a ride in here. And obviously we've got some some issues in the world economy right now, and the gears running the world economy.
Yep. Yeah, and you look at like some other these other type of currencies like Bitcoin and all those kind of things, and they're just getting hammered today. So yeah, that's everything's getting tore up. So all right, next thing I want to talk to you about too was when you're looking at what we see happen right now, and the guys you're talking with, and you're looking at the dryness right now as people go into drill wheat this year. What are some of the that's going to be an edit. What are some of the things you're seeing as far as some of the news you're getting out of like Kansas and in eastern Oklahoma, western Oklahoma when it comes to the wheat situation?
Yeah, extremely dry.
Yeah.
Extremely dry situation. You know, I think producers are just kind of sticking seed in the ground, hoping that there's some moisture at some point along the way to get a stand and get this thing up and growing and into winter. We haven't turned the drought yet. Still real problems out there. You see the wheat market actually, in spite of all the negativity in these outside markets, you know, maybe one of the shining stars recently is the wheat market per day moving average. Of course, getting her is going to escalate in Ukraine, not slow down or end anytime soon. And we're having problems with dry weather in the plains still. Maybe we just got, too low. And so it's the first time in a long time we've kind of challenged, and I think yesterday closed above that 200-day moving average. That's kind of the line in the sand that the funds use to get in and out of positions. They're short. And so now they'd be trying to get out of shorts and maybe build a long position. And part of that is exactly what you said. We've got still a potential production problem, in the northern hemisphere, at least in the southern plains right now.
Yeah, it's been a long, hot summer, man. I tell you what, it's been. I'm ready for some cool, wet weather to come through. We're starting to see that, out here. We're starting to see that cool weather come through, and it's bringing some rains with it. It's kind of too little, too late for a lot of situations as far as anything is going to do for any crops. But hopefully, we can keep that moisture up and through the fall and into the winter, and have some good planting conditions going back into the spring.
Yeah, it's overdue, man. Though it has been a rough go for those guys, and the Panhandle, Oklahoma, Kansas. It's not fixed itself yet. When one rain's not going to do it. They just need some snow this winter, maybe some rains before it gets too cold, and slowly but surely, hopefully by next spring we can kind of fix and heal some of the problems out there. But it's going to be a slow road in doing that.
Yep. All right, so let's talk about the cattle complex real quick. Looking over at what box beef has done over the last couple of weeks, and we've seen some premium there get shaved off. You start looking at cattle and feed reports. I think there's a feedlot inventory report that comes out. I mean, cattle feed report that comes out today, if I'm right. But I guess looking at that, Chip, there's more and more cattle being put on feed, drought situation, those kind of things, some herd liquidation, those kind of things, which is nothing new. It's been going on for a while. As you look at this situation in the beef complex there, I guess when do you start seeing some of that rebound that we've been talking about here a lot? A lot of people have been talking about, oh, there's going to be a rebound because of, we're going to stop liquidating the herd, we're going to start growing the herd, these kind of things. And we're starting to see, we're still seeing that reduction. So the price is still being elevated. I guess talk about that a little bit.
Yeah, it's an interesting market right now because of what you mentioned, right? Like the whole drought situation has really extended the window of this herd liquidation and breeding stock liquidation, and it's put some extra volume on the market. But as you look out at the futures, here recently, the last 2 or 3 days, we've had a pretty healthy sell-off from the highs, but the deferred live cattle futures have been well north of 150. So we are reflecting that a little bit, but yet we can't turn the corner. We still have big numbers on feed. You mentioned the cattle on feed report this afternoon. It's likely still going to show big numbers. We haven't ended that. So to answer your question, it's Mother Nature, right? Do we kind of heal things up? We need to get the drought fixed and pasture conditions and grass in better shape. And then once that happens, which is going to be spring at the earliest, but that's when I think the next cycle, it kind of got pushed out because the drought, extended. But if we can ever kind of turn the drought, get pasture and rangeland back in shape, and get producers wanting to, put cattle back on grass when they have grass and they have some hay to feed, that's when that demand will really start shrinking the supply of cattle. They'll have to repopulate their herds. They'll have to pull heifers, out of the supply chain, so to speak. And that's when things get really scary bullish. If you can time that at the same time that the economy kind of catches hold and starts growing again, it gets really scary bullish out there. But it's kind of, because of the drought, pushed out a ways. I think spring at the earliest, and it might be extended even further if we can't get some better moisture in some of these drier areas of the plains.
Right on. Okay. Hey, well, good stuff as usual, Chip. Folks want to reach out to you and get more information about what it is you're doing at Blue Reef Agri-Marketing. What's the best way to do that?
Yeah, best way, just call our office, 309-550-7213. You can also, obviously get a hold of me, C. Nellinger at bluereefinc.com. That's a long email. I wasn't thinking very well 12 years ago when we got those email addresses. So just call our office. That's the easiest way, because my email's really long and my name's hard to spell, and I wasn't thinking very well when I designed my email address.
Yeah, I've got the same issue with my email address as well. So, all right, Chip, appreciate you being on the podcast, man.
I appreciate being on here, Casey.
Thanks, bud. I'm Casey Seymour with Moving Iron Podcast. Make sure you check me out on Facebook, Twitter, and Instagram at Moving Iron LLC. You can find me on LinkedIn at Moving Iron Podcast, and you can also find me on the ever so cleverly named Moving Iron Podcast YouTube channel. So check that out, and you'll see the video version of this podcast here. If you need more information about the Moving Iron Summit coming up in Nashville, Tennessee, September 11th through the 13th, you can send me an email at MovingIronPodcast@MovingIronPodcast.com. Or you can go to MovingIronLLC.com and you can see what a similar lineup would look like for 23 with the 22 stuff that's up there right now. So if you want some more information like that, just like I said, send me an email at MovingIronPodcast@MovingIronPodcast.com or go to MovingIronLLC.com and you'll get all the information that you need right there. So with that, I'm Casey Seymour with Chip Nellinger. Let's move some iron, folks. Out.
Moving iron in the 21st century.